Welcome to Q1 2026. Bitcoin just smashed to $150,000, printing a new all-time high. For the believers, the wait has finally paid off. The calls are getting louder. $250,000 by the end of 2026. A $1 million Bitcoin by 2030. Some are saying this is only the beginning. If Bitcoin just broke the 4-year cycle, the roadmap every investor lived on for over a decade is now gone. So now the question isn't if we're going to go higher, but is how to navigate a market with no script. What does a cycleless Bitcoin mean for your bag, your strategy, and the future of global finance? Welcome to the next chapter of crypto, the uncharted era. You are now entering the crux of crypto. Hey guys, Crux here. Welcome to the ultimate pit stop for Web3 wisdom. Smash that like for Pup Tugs. He said, why have diamond hands when you can have diamond paws? Quick heads up, I just dropped a full data-driven breakdown on the 4-year cycle. And in a couple days, I'm releasing the bear market scenario. So whether you're bullish or bearish, the goods, they're coming your way. The 4-year cycle has been the holy grail of crypto, the blueprint for every major top and bottom. But if it's truly broken, we're now entering something new, a forever market, more like gold, steadily climbing over time, but without the clean, predictable rhythm we've been relying on for over a decade. Over time, breaking the old cycle means less volatility in the charts. No more spending years digging out of a brutal bear market winter. Those 70% dips that used to shake everybody out, they're becoming a thing in the past. And as Bitcoin's price action matures, so does the trust behind it, which means it's only a matter of time before the classic 60-40 model evolves into the 60-30-10, with crypto claiming its seat at the table. 10% might seem small, but the global asset management industry controls $150 trillion. A 10% crypto allocation would mean nearly 4x the current crypto market cap, just from traditional portfolios joining the revolution. Here's an example. Ray Dalio's all-weather portfolio, which is all about diversifying across economic environments. And guess what? Crypto fits right into that design. Bitcoin is now officially treated as a commodity by the CFTC, and just a tiny carve-out from a few traditional categories can move mountains. Shift 4% from commodities into Ethereum, 3% from stocks into MicroStrategy, 2% into Bitminer, 1% into SUIG, and sprinkle 2% of that gold into Bitcoin. Suddenly you're sitting at 12% crypto allocation without touching the bond side or taking reckless risks. This is what it means to go forward without a script. Crypto isn't just speculation anymore. It is becoming a core piece of global portfolios, quietly settling in and waiting, without cycles. It might not feel as thrilling. We may no longer get those explosive, once every 4 years face-melting bull runs. But as mainstream investors passively adopt crypto, the trade-off, it'll be worth it. Much higher ceiling and less volatility. In my last video, I showed how institutions, government, everyone except retail doubled their Bitcoin holdings from 2021 to today, now controlling roughly 18% of the supply. If they repeat that same move over the next 4 years, we're looking at a massive supply squeeze. Because right now, only about 11% of all Bitcoin is sitting on exchanges, meaning there just isn't enough liquid Bitcoin for another wave of heavy buyers. Same demand, dramatically less supply. That is not just bullish, that is rocket fuel economics. And here's the wild card. We've come this far without any major company actually adopting Bitcoin on its balance sheet. What's happening instead? BlackRock is buying, Fidelity and State Street are the biggest institutions. Crux, what do you mean? Well, IBIT, BlackRock Spot Bitcoin ETF, is moving fast. It's not BlackRock itself buying the Bitcoin. It is you and me, the clients, putting up the money, while BlackRock issues the shares and collects the fees. In other words, these ETFs are institutional products, but the demands driving them are retail driven. Tesla is the lone giant from the top 300 companies by market cap to publicly hold crypto on its balance sheet. And I'm betting for a second to soon show up, then a third, and a fourth, and so on. Let's be real. Apple, Google, Amazon, they're not rushing to toss a chunk of their trillion-dollar treasuries into something as volatile as crypto. They move slow. They follow the rules. But companies like Tesla, they lead revolutions. And if the 4-year cycle stays intact, this new regulatory era has done something massive. It gave Wall Street clarity and gave crypto liquidity. Stablecoins are the bridge. The ETFs are the on-ramp. The infrastructure is finally built to handle the biggest institutions on Earth when they decide it's time. The go signal is basically blinking at this point. And every day that passes without a breakdown, the odds of a bear market shrink. The market is sinking with the United States business cycle, specifically the ISM Manufacturing Index. Raoul Paul believes as Treasury debt gets rolled forward and liquidity keeps flowing, Bitcoin is shifting into a 5-year rhythm, not 4. If the ISM peaks in Q4 2026 and Bitcoin continues to track it like it has all cycle, the peak might just be right there with it. I'm not betting the farm on this extended cycle theory. Not yet. But here's my line in the sand. If we make it through Q4 holding above $100,000, the 4-year cycle to me is officially dead, and we officially enter a forever market. This changes everything we know on how to invest. Right now, we ape into meme coins because we assume there's a clock. 1 or 2 years of a melt up, then everyone rushes for the exit. But without a predictable blueprint, the game flips. In a world without clean tops or bottoms, blue chips become the alpha. Ethereum, Solana, XRP, projects with real infrastructure. Speculation only works in a controlled environment. And until we learn the new market structure, smart money de-risks and survives. On the flip side, if global tensions cool off, wars de-escalate, tariffs loosen up, inflation settles, job security returns, smart money will slam the risk on button fast. Markets don't wait for a perfect world, they front run the improvement. And that brings us to our next two big levers shaping this cycle: Fed rate cuts and gold. Look, I got nothing against gold. It's the king of don't lose money for thousands of years. But expecting a $30 trillion rock to go parabolic forever without a brutal correction, that is not investing. Human behavior leaves fingerprints on every chart. Fear and greed, that is Fibonacci. That is market psychology. With crypto, you profit by doing the opposite of how you feel. But with gold, you profit by doing exactly how you feel. Warren Buffett said it best: buy when others are fearful and sell when others are greedy. Right now, gold is greedy and crypto is fearful. That is a setup smart money dreams about. After all, we're talking about an asset class almost 10 times larger, shifting into an asset class starving for liquidity. That is not a maybe. That is math meeting opportunity. Now, let's talk rate cuts. Historically, when the Fed starts cutting, gold starts ripping. There is a strong inverse relationship between gold and real interest rates. And on average, gold has gained 15% in the 12 months after the first rate cut. So, gold probably won't slow down until mid next year. But here's the question: how do we run into Q2 without a correction that nukes everything? The answer: money market funds. MMFs almost move tick for tick with the Fed. Rates go up, MMF yields spike. Rates drop, MMF yields collapse. And cash goes hunting for returns. And there's $7.5 trillion just sitting in MMFs, the most liquid pile of capital the world has ever seen. We've already had one rate cut in September, and now another 25 basis point just hit. The countdown has officially started. So, where do I think Bitcoin is going next year? I'll explain right after I tell you what's happening in our Discord. We've got 3 WAP memberships, each one giving you daily live Q&As. The gem hunters are finding those low cap gems before they send. The VIP trading group has over 500 members sharing the best trade setups. The Academy takes your trading from rookie to pro, which now comes with expanded courses that teach you how to build the perfect portfolio. Plus, we offer one-on-one portfolio audits. I've already walked over 200 members step by step through my market approach and what changes I would make in their shoes. It is not financial advice, just the exact playbook I use to win in these markets. Use my affiliate link below to help support this channel. And I got another big drop coming this week. On Friday, we'll dive deep into my bear market scenario and what a full year of pain could look like. Stay tuned, you do not want to miss that one. As for me, I am not selling, not a single Satoshi. If I have to round trip detour to go higher, so be it. I'm stacking dry powder and saving it for Q4 2026 because if we do get that bear winter, that is where legends are made. Even under classic diminishing return math, this cycle's 8x from 15.5 to $126,000 would have next cycle around a 4x, which puts Bitcoin near $500,000 by 2029. And that is my conservative scenario. The truth is, everything we think we know about diminishing returns could change in a world full of ETFs, stablecoin liquidity, and institutional demand. This is my playbook. Plan for the dip, but be ready in case things start cooking. Thanks for sticking with me until the end. Now, I want to hear from you. Where do you think Bitcoin will get this time next year? Drop your answer in the comments below. Make sure to subscribe, hit me with that follow on X, and join our free Discord server. Catch my live streams every Tuesday and Thursday at 4 p.m. Eastern Standard Time. Also, check out my Ultimate Fourier Cycle Deep Dive and set up your alerts now because I'll be dropping my bear market scenario soon. Check out my Fourier Cycle Deep Dive right here. I know you'll enjoy it. And while you're at it, here's another video you don't want to miss. Click one of these to dive deeper into the crux of crypto.